Hello, everybody. Welcome back to Lockdown Lessons. With me today, I've got Jamil Akhundov from Ploutos Associates. So firstly, I just want to say a big hello to you, Jamil.
Hello, Philip. How are you?
Very well, thank you. Very well. So the whole idea of these interviews, Jamil, is really to help people understand what you do and how you help people. So there will be a few people watching this that don't know anything about Ploutos Associates. So perhaps you could just educate them and tell them exactly how you help people.
Sure. Thank you, Philip. We are essentially a debt advisory firm based in London. We specialize in alternative debt funding to real estate and also to corporate situations. We work with around, I would say, 350 alternative lenders, which are mostly non-bank financial institutions like hedge funds and family offices. And, every situation is different. We've done it for more than 10 years now. And, the situations and clients are all, different.
Fantastic. Thank you very much. That was really interesting. So in terms of just thinking about the COVID-19, it's all coming to an end now, fingers crossed. So if you cast your mind back to sort of March 2020, when it all started to go wrong, at what stage then did you think, hang on, this could be an issue either for your industry or for the country as a whole?
Yeah. So yeah, the business was all of a sudden very different in March, April 2020, and it was different in two ways. One, the investors we're working with mostly have either retrenched or taken sort of wait and see approach. And two, especially on the real estate development side, the clients, meaning the borrowers, struggled with all sorts of things, getting people on the side, with getting the valuations, getting, surveyors, etc. So it created, I wouldn't call it a havoc, but it created a massive dislocation of the flow of business in between, I would say, March up to September 2020.
Okay, wow. So it was a good sort of 6 months before things started to change.
Yeah.
Okay. So, and how did you sort of adapt in those first 6 months then? What did you do differently that you weren't doing before?
Yeah. So we are pretty proud in terms of, the help that we've offered to our borrower clients, especially. And that's because our panel of lenders or investors includes quite a lot of family offices and private lenders or funds which are, sort of which did not retrench from the current market. And we're proud because during that exact period, we provided what we call rescue funding, last minute rescues to a lot of our clients, that were in the process of obtaining funding from other sources, and then they were dropped, last minute, etc. So we helped a lot during this period. So we were unusually busy, I'm proud to say in 6 weeks in March, April, we closed 6 deals, and those were all rescue situations where urgent action was needed, which is in a way what we specialize in urgent, super rapid transactions. Yeah.
Fantastic. And I had a look at your website, and the ways you actually find solutions for these problems is usually quite creative, right? It's not just the regular way of actually working. So that's great. So in terms of the first 6 months, obviously you were saying that you've helped people in rescue them from situations that they were in. So since September 2020, what changed since then?
Actually, September, I would say September, October was a little bit of a watershed moment when we started the wave coming back to pre-pandemic levels. And by January 2021, it was pretty back to normal. So I would say 75–80% of investors were back in action, and it wasn't still 100%, but 75, 80 did come back pretty rapidly. And on the deal-making side, the developers, sophisticated real estate entrepreneurs especially, became really active, trying to tactically utilize the situation to bid on deals, to transact, to do a lot of things. Also, in real estate, we saw a couple of interesting trends. We saw quite a massive immigration from center of town dwellings to family size out of town dwellings. So the developers that were bringing on stream the product, 5-6 bedroom houses, family size, we're selling them very, very well. That's one trend. Second trend, we saw staycation, market increasing, but basically, urban crowd, instead of going to Greece, Turkey, etc., decided to stay at home, and all of the hospitality related real estate classes that we advise on as well became very active, especially on apart hotel, lodge parks, recreational places, family hotels, etc. They were very, very busy by the staycation market. And the third trend that we saw quite a bit is massive, let's say, massive increase of converting existing commercial properties, especially offices, into residential, because lots of companies reduce the in-office staff, move them into remote working style, and so a lot of offices became vacant, and they were being sold. The government has helped with something called permitted development rules, where basically developers, which are a lot of our clients, ended up bidding, acquiring vacant office or sometimes retail logistics assets and converting them into residential, which then alleviates a little bit the housing shortage for the country as well. So it's a good thing. Yeah, so I'm sorry for a long-winded answer, but
no problem. It was interesting because
yeah.
I think a lot of people have experienced a lot of change during COVID, and there are lots of knock-on effects probably that haven't even happened yet. Some of which are quite predictable, such as inflation. Others not so predictable. We can't even work out what's going to happen next, unfortunately. So, how have you managed to cope with the issues with the the light's gone out now, but when it comes back,
apologies.
We shall carry on regardless. No problem at all.
Sorry about it.
That's okay, no problem. So in terms of these opportunities, it's been fantastic and very helpful. How have you managed to cope with the increased demand?
So it is a good question. The demand has increased because the developers, especially, or sophisticated real estate entrepreneurs, active players in the real estate market, saw a lot of opportunities, that they wanted to capitalize on. And the way we managed it is by simply managing people's expectations in terms of our capacity, how we can help them, but also trying to mobilize our capabilities, and working more efficiently, involving quite a bit external parties, to plug the capacity, human capital capacity gaps we might have experienced, To be honest, one negative outcome of the COVID is that things in the real estate debt financing world became much slower, because typically any real estate financing transaction involves 2 or 3 external parties, which are legal firms, quantitative surveyor or technical advisory firms, and valuation firms. So unfortunately, while before 2020, March, things were going in certain predictable timing scenario, with COVID, everything is much slower. Everything, to the point where valuers, for instance, in the beginning were simply afraid to attend premises. But also these days, they might be having only a few days at work, so they can't really make themselves available 5 days a week, etc., etc. So finding a valuer, same with legal firms, etc. So just that's one negative, massive timing, massive delays in timing of transaction process is one of the negative outcomes. Yeah.
Okay, so how have you managed to manage your clients' expectations around these lengthier lead times that you've got?
Yeah, so one of the timing pressures that the developer clients, or even real estate entrepreneur, real estate investor clients we have, is the pressure on the vendor side. So when the real estate transaction is taking place, there's a certain timing which is agreed on the two sides, where typically, certain timing towards the exchange and then further timing towards the completion, right? One of the ways we manage the delays, potential delays, is to put ourselves as well on a call with the vendor by telling them that, listen, we have a funder for this transaction, but the funding is being delayed due to COVID and process, etc. Can you please allow our funder to come through with the transaction and help our client to acquire it? Can you give us an extension, time extension? So that's one of the ways, we help the clients. The other way, is sometimes the developers might be delayed by contractors. By the way, another negative impact of COVID is inflation. Simple material and construction skill set price inflation. So if you're building anything these days, it costs you anything between 7 and 15% more than in 2019. So if you started your works before COVID, you would experience massive cost overruns, right? So that the other way to manage is when we either replace existing historical heritage lender by a new lender who is more accommodative to price increases, or by engaging with the lender on a call and explain why there is a cost overrun and why our client cannot deliver this within this budget, etc. So yeah, the bottom line is, in our business, we have to be nimble and friendly and always try to do our best to explain rationally the other side why certain things have happened.
Fantastic. That's interesting because, yeah, again, everyone's had challenges, and it's interesting to know what can go wrong and how you can mitigate against it. So that's really interesting, Jamil. So just from a personal point of view, then, if you can cast your mind back to, having to spend every hour of every day in the same place a couple of years ago, and you couldn't go anywhere, we weren't allowed out. What was the first thing you did when you were allowed out into the wild?
It's a good question. Just seeing people, meeting them, having time out in a restaurant or cafe was an exotic adventure, right? So after lockdown, it was quite a surreal feeling. I think, I remember just taking my family out in a cafe or something. It was just like everybody were feeling that we are somewhere, experiencing something exotic, right? Yeah. So yeah, it's I mean, we as humans are social animals, right? And we need to be out and about, meeting each other physically. And while lockdowns are good to help overall societal level health standards, they might be not as good from psychological perspective, because they might go contrary to our human nature as social animals. But
I agree.
anyway, we'll leave that to another discussion.
Fantastic. Good. So just the final two questions then, really, Jamil. So for anyone that's actually watching this at the moment, that might be your ideal customer, that might be someone who might be able to benefit from speaking to you, what does your ideal customer look like? Who would you most like to speak to? Who can you help the best?
Good question. You know, I think there is no ideal customer. We like working with customers that know what they're doing, you know, from their trade perspective, meaning if they're developers, they know what they're buying, they know how much it's going to cost them, they know, you know, which area, how much they will sell it for, etc. So the knowledge of the, let's say, product, because, you know, we have developers, we have real estate heavy corporates, you know, we have corporates that own chains of hotels or chains of cafes, chains of, you know, data centers, care homes, etc. So whoever it is, would like them to be specialists in their area and knowing what they're doing from their business perspective. So that's the first. Secondly, we also want them to be well advised from external advisors' perspective, like quantitative surveyors, lawyers, etc., when they're entertaining a transaction, in terms of, you know, whether there are any shortfalls, you know, in the transaction. Sometimes lawyers do preliminary checks on a deal, etc., etc. So, you know, we usually come when a client is prepared, they know what they're doing, and they've due diligence their asset before, you know, we start reviewing everything and talking to the lenders to help them, right? So we want clients to be specialists in the area, professionals, you know what they're doing, and be prepared, you know, for that particular transaction that they're approaching us. So yeah, this is essentially it. Of course, we'll be happy to converse with anybody, you know, about any debt situation. And by the way, debt is the only thing we do. But you know, when it comes to actual life transaction, these are the key ingredients which are important.
Fantastic. Thank you very much, Jamil. So final question is, if anyone wants to reach you, I will add your details below in LinkedIn in the comments box below in YouTube. But I just wonder what's the best way they can reach you, because I don't want it to be difficult for you.
Yes, no problem. I think just sending us an email. Our website is www.ploutas.com. And email address is info@ploutas.com. Ploutos is simply short of Ploutos Associates. Yeah. So
I see.
Sometimes people confuse Ploutos and Ploutas. It was just we decided to shorten the two words in the name of the company. So that's why it's ploutas.com.
Okay.
By the way, we will be having a new website coming on stream, and its extension will be ploutos.co.uk, and it will be much more sophisticated website. I would expect it to be live in about 4 weeks' time, probably towards end of February.
Lovely. Okay, well, that's been an absolute pleasure, Jamil. Thank you so much for your time. Really interesting at learning a bit about what you do and how you help people. And yeah, catch up soon.
Yeah, thank you, Philip. Thank you very much for this chance. And best wishes with everything.
No problem at all.
Catch you soon.
Thanks,
Thank you.
Jamil. Bye.
Cheers. Bye. Bye.